Ladies and gentlemen, good day and welcome to Steel Authority of India Q4 FY23 earnings conference call hosted by Nuvama Wealth Management. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touch-tone phone. I now hand the conference over to Mr. Ashish Kejriwal from Nuvama Wealth Management. Thank you and over to you.
Yeah, thank you, Selvin. Good morning, everyone. On behalf of Nuvama Institutional Equities, we welcome you all for Q4 FY23 conference call of SAIL. We are happy to host Mr. Arvind Tulsiani, Director of Finance, along with his team. Now I would request Mr. Tulsiani for his opening remarks, and thereafter we can open the call for Q&A. Over to you, sir.
Thank you, Ashish ji. Good afternoon, everyone. It is my pleasure to welcome you all to the investor Concall on the
This call is now being recorded.
For Q4 and financial year.
Call recording has now ended.
Let me first briefly run through the economic scenario in which we operated during the financial year 22-23, which was quite challenging. We saw a consistent decline in the prices of steel in the first 3 quarters on the back of international prices. There was some stabilization of prices in Q4. The year also saw fluctuating prices of inputs, inflationary pressures forcing corrective action by the central banks, which in turn led to growth getting compromised, disruption in supply chains, slowdown in Europe and US, lockdown in China, etc., which impacted the GDP of economies across the globe. As a result, the apparent steel consumption saw a decline over 3% during the calendar year 22 over the previous year. Indian economy, however, fared better than the other major economies, and the growth during financial year 23 is estimated at 7%. The domestic production and consumption of steel registered growth of 5% and 13% respectively during financial year 23. As per WSA, India at the rate of 5.8% was the one of the only 2 countries to register a positive growth during calendar year 22 among the top 10 steel producing nations. Coming to the performance of the company, SAIL, despite all challenges, registered best ever production and sales performance during financial year 23. During the financial year, the company produced highest ever hot metal, crude steel as well as saleable steel. The hot metal production stood at 19.4 million tons as against the previous best of 18.7 million tons. Crude steel production stood at 18.3 million tons as against previous best of 17.3 million tons in financial year 22. Saleable steel production stood at 17.2 million tons as against the previous best of 16.9 million tons in financial year 22. Now coming to marketing, the marketing had to face numerous challenges as already narrated. Despite the same, the company registered its best ever sales volume during the financial year 23 at 16.20 million tons, marginally higher than the previous best of 16.15 million tons achieved in financial year 22. In fact, the domestic sales at 15.8 million tons grew by 7% over 14.8 million tons during financial year 22. The exports, however, declined to 0.4 million tons in financial year 23 from 1.4 million tons in financial year 22, a degrowth of 68% as the international market faced stiffer stress. On the financial front, the company once again breached the 1 lakh crore mark for its turnover. The turnover of 1,03,768 crore was the best ever, outperforming the previous best of 1,02,805 crore achieved during financial year 22. The profitability, however, could not match the levels during financial year 22, majorly due to high input prices and marginal decline in the NSR. EBITDA for the year stood at 9,379 crores, a reduction of 58% over CPLY of 22,364 crores. PBT and PAT at 2,637 crores, and 1,903 crores respectively, saw a reduction vis-a-vis 16,039 crore and 12,015 crore in the previous year. The borrowings have increased to 29,270 crores as on 31st December 22, as against 13,386 as on 31st March 22, and has reduced in the Q4 by around about 3,608 crores, coming down to 25,662 crores as on 31st March 23. The recent decline in the steel prices, especially for the long products, is again a cause of concern and may affect the profitability to some extent. However, the simultaneous correction in the prices of imported coal is expected to cover up the sales. Now coming to our sustenance and operational efficiencies. In addition to the production and sales in the current year, the company is committed to take measures for ensuring sustainable operations. In the operational efficiency, the company has been making steady progress for reducing coal and coke consumption, higher usage of CDI, and improving its BF productivity. The company has achieved its best ever performance on these parameters during financial year 23. The company is leveraging its new facilities to a good effect. We had already stopped production through the twin hearth furnace route. The production of ingot route is also being brought down consistently. During financial year 23, the same stood at 0.8% versus 1.1% in financial year 22. The share of value-added steel increased to 52.7% in financial year 23, vis-a-vis 51.1% in financial year 22. The percentage of semis in production is also coming down with higher capacity utilization of our mills. The percentage which stood at 19.3% in financial year 22 has now come down to 13.1% in financial year 23. By engaging conversion services in and around the plant demand pockets, the percentage share of semi in sales has been even lower at 9%, coming down from 15% in financial year 22. As a responsible corporate, we have been working towards cleaner and greener steel by ensuring environmental preservation over the years by use of initiatives like waste utilization, over 100% in financial year 23 as compared to 83% in financial year 17. Reduction in carbon footprints, various projects under our commitments to zero liquid discharge, eco-restoration of areas, regions around the plants and mines, plantation of more than 21 million saplings till date, use of alternate source of energy like hydropower and solar power. Towards stakeholder management, the company had paid a total dividend of 3.25 rupees per share in financial year 23, which included 2.25 rupees per share as final dividend of financial year 22 and 1 rupee as interim dividend of financial year 23. Further, the Board of Directors has recommended a final dividend of 50 paisa per share for financial year 23, subject to shareholders' approval at AGM. As a means to improve transparency, the company has been procuring materials through Government E-Marketplace, GEM. The procurement doubled during financial year 23 to around about 9,200 crores against the previous year figure of around 4,600 crores. The company has been engaging in numerous CSR activities across the country and primarily in the vicinity of our plants and units. The activities are undertaken in conformity with the Companies Act as well as DPE guidelines. IMF, in its latest World Economic Outlook of April 23, has projected a global growth to bottom out at 2.8% this year. As supply chain disruptions are unwinding, dislocations to energy and food markets are receding, IMF expects global growth to rise modestly to 3% in 2024 as inflation comes further to 4.9%. The major advanced economies are seeking much lower increase in GDP growth at 1.3% for 2023, with Germany and UK actually projected to contract by 0.1 and 0.3%. The emerging economies are expected to fare much better than the advanced counterparts, growing at 3.9%. The Indian economy, meanwhile, stands out as a silver lining with a strong demand and consumption pattern. Amongst the major economies, we are placed much better and beating the growth projections even for China. India is expected to grow in the range of 6 to 7% over the next few years in various reports like IMF, WEO, World Bank projections, Monetary Policy Committee of RBI, etc. As per IMF, growth in India is expected to moderate in CY23 to 5.9% before climbing higher to 6.3% in 2024. As per the World Steel Association, demand will see a 2.3% rebound this year to reach 1822.3 million ton. Steel demand is forecast to grow by 1.7% in 2024 to reach 1854 million ton. In India, the demand is expected to show healthy growth of 7.3% in 2023 and 6.2% in 2024. I am hopeful that the good times await us and our investors. With these words, I hand it back to Mr. Kejriwal for opening the Q&A session. I'm sure you all have some queries on the performance. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use hands while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, good afternoon, everyone. Thanks for taking my question, sir. I have a couple of questions. The first one is on coking coal cost. If you could let us know what was the change QOQ in the coking coal cost in Q4, and what do you expect in Q1? That is the first question.
Yeah, the imported coking coal cost during the third quarter was around 25,500 rupees, and in the fourth quarter also it was in the same range of around 25,500 rupees. And coming to the projection for the next few months, it will be a bit higher at around 28,000 rupees.
So when you will get the benefit of the lower coking coal prices prevailing in the country?
See, this time about you can say around 75 to 80 days. When we get coal from US, so the time taken by to reach our ports is around 40 to 45 days, and when it is from Australia, it is around 20 to 25 days. So 40 to 45 days plus the movement inside within India and at the ports. So the average is around 75 to 80 days. So the benefits of you can say the month of May. From May we have started getting the real benefit of lower price of coal. April and May, we'll probably start getting it from the last week of June, second half of June and July onwards.
Okay. The second question is essentially on demand. What we have seen that in several quarters there are, as we talk to different channel guys, they mention about the subdued demand prevailing in the country currently. While we are we are saying that the demand will grow by 13%. Now, given all this aspects, in which sectors do you see for yourself demand growing, and what would be our sales volume target for this year, FY24?
For the year FY24, we have projected a sales volume of around 18.7 million ton, which is an improvement of 15% over 22-23. And we expect the demand to be there all throughout, means in all the segments, especially in the infrastructure. And of course, there will be a slowdown in the demand during the monsoon season, but we expect more or less a consistent sort of demand thereafter also.
In last 2 months, have you seen any slowdown in demand, particularly infra and the allied sectors?
No. There is no slowdown in demand, at least for our products.
Okay. Thanks, sir. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Somaya V from Avendus Spark. Please go ahead.
Yeah, thanks for taking my question, sir. First question is on the rebar versus HRC spread, the longs versus HRC. So recently,
from your line.
So I request you to please.
so my first question, am I audible?
There is a lot of disturbance from your line.
The questioner has hung up the call. We shall take the next question. The next question is from the line of Mohit Bansali from Bonanza Portfolio Limited. Please go ahead.
Yeah, sir, regarding your, thank you for taking my call. Regarding your salary cost, first question is, what was your employee strength comparative year to year? Hello, sir, can you hear me? Hello? Hello, can you hear me? Hello?
Let me just have a check with the management, please. Please hold while I connect to the management. We have the management line connected back again. We shall continue with the previous questioner.
Please.
Mr. Mohit, please go ahead. Your line has been unmuted.
Yeah, can you hear me now?
Yeah, I can.
Yeah, thank you for taking my call. First of all, I want to know what was the employee strength comparatively in the year end, last year to this year? How much reduction it has been?
There has been a reduction of around 3,800 to be exact. There is a reduction in manpower.
3,800.
Yeah.
3,800. So I'm curious to know that since the reduction is there year to year, why the employee cost has gone up 15% year to year?
15%. I don't think year on year there has been a reduction of around about 800 crores.
Last year it was 3,000. Last year it was 3,000 crore. It is showing now. It is showing 3,400 crore.
So I think you are talking about quarter to quarter.
No, I'm talking about last March quarter, last financial year March quarter.
Quarter to quarter. I think you're talking quarter on quarter. Yeah. Actually, what has happened is that at the year end, normally what happens is we have a fresh valuation of our from our actuary. So based because otherwise normally go by the previous year's figures only with some marginal escalation. So when we have done the actuarial valuation this year, there was an increase of around about 400 crores because of that. So which has impacted in the particular quarter. And besides that, the pension provision which we had made up to the third quarter, that was considering since the profit was low at up to the third quarter, we had taken it at 3%, and now we had to do it at the rate of 6.6%. So that 3.6% additional for pension and another 300 to 400 crores approximately for this revaluation after the actuary had given the figures for 22-23.
Okay, so what is the call for this financial year? It will be gradual, like earlier Concall you said that wage revision will gradually come down.
Yeah, it will be coming down this year also. See, there is a reduction of around 5%. See, when the manpower is coming down, there will be a reduction for that. But besides that, see, there is a normal increments and the DA provision which we have to keep. So that also has some impact on the salaries and wages. At least you can say 6 to 7% for the normal employees who are still working. So basically every year we can expect a fall of around 4 to 5% in salaries and wages.
Okay, so it will be more or less same, or it may come down a little bit?
Yeah, it will come down.
Okay, second question is on your debt trajectory. What do you think your debt trajectory will be in this financial year? It will come down or it will go up?
We expect it to come down, especially with these softening of the coal prices, we will surely get a benefit of that, because at the present, whatever is the outflow for coal, it is surely expected to come down by, you can say, around about 1,000 to 1,200 crores per month. But the other thing which plays a vital role is the net sales realization of our products. So we have to keep our fingers crossed for that. So if this happens, so maybe with the capex also, what we are planning of around about 6,000 crore, we may still be able to reduce our debts to some extent.
One thing I just want to submit, that capex you are doing every year 4,000 to 5,000 crore. So that is a huge capex. So why don't you mention what capex you are doing in your presentation, like new coking oven or SMS in Rourkela, and what is the timeline of completion? It will be very helpful for us if you mention everything in your presentation as well.
Okay, we'll keep it in mind.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Preetham Roy from B&K Securities. Please go ahead.
Yeah, hello sir. Good afternoon, and thank you for the opportunity. My first question is that you have mentioned a full year sales guidance of 18.7 million ton. So if you can tell me where this is coming from, whether domestic or export, and how the mix will come in, so that will be a great. That is my first question.
Shall I get back to you regarding the domestic and this thing in a few minutes, by the end of this call?
Yeah, that's my main question is that is there any, what is the mix on that, and from which sector it will come from? That is the main question. And the second question is that employee expense that you have explained just now, but the other expense, there is a jump in sequential basis. So if you can mention, is there any one-off on that basis or anything else that will please tell me on that?
There was a substantial jump this year because of the foreign currency losses which we have taken in this year because of the sudden hike in the dollar rate. You know that most of our imports are for coal are there. Nearly 85% of our entire coal is being imported. So because of the sudden jump of the dollar rate in this particular financial year, we had to take quite a lot of hit because of that.
Okay. And you just mentioned that the overall debt will come down by 6,000 crore for this year, FY24, right?
Like our original planning is bringing down the debt, but we are not too sure about this thing. It depends, it entirely depends on the market dynamics, the NSR as well as the coal prices. The coal prices, if they continue like this, then there is a good chance of the debt coming down.
By 6,000 crore, right?
We cannot commit the figures at this moment.
Okay, and the last question is that, sir, can you please quantify the capex number for this full year?
Come again?
Capex guidance for the year.
Capex you want to know about 22, 23?
24.
23, 24. 23, we have projected a capex of around 6,500 crore.
For the coming year, right?
Yeah.
Okay, thank you, sir. Thank you for the opportunity. Understood.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, so good afternoon and thank you for this opportunity. I have a couple of questions. So first, on the volume guidance of 15% growth, so if we look at last 5-6 years, I mean, it took us almost 5 to 6 years to achieve this 15% growth from say 14 to 16 million tons. Now we are guiding to achieve the similar performance in 1 year. So just want to understand some breakup as to which all plants and how should we see on a quarter-on-quarter basis the growth coming? Is it more back-ended, or should we start seeing this growth from 1Q itself?
Actually, the growth is more or less from the quarter 3, it will be substantially higher. Like if you see that even in every year we have a substantial growth from the third quarter onwards. but we have not done too bad in the month of April also. I think we have crossed 1.3 we have crossed. So if you take that 1.3 into 12, that only works out around about 16 million ton. And with some sort of a growth towards the third and fourth quarter, we expect to achieve these targets.
Okay, got it. So my next question is on working capital. Now every year there's a big swing. Last 2 years there was a release of almost more than 20,000 crores, and in FY23 the working capital increase is almost 14,000 crores. So sir, what is the stable level here to expect, and why such sharp increase in working capital?
See, basically what is happening is this, we are basically the trade payables, whatever we have got, they are fluctuating a lot. That is basically depending on the coal prices, and we have got these deferred payment terms. So that is basically playing a major role in this working capital, this thing. Collections, we are doing it quite well. Our debtors are coming down, means you can see that they are in the range of around about 5,000 crores. They were there last year also, and this year also they are on the same levels. So basically, it's basically the payables which are playing a dominant role in our, because it's entirely dependent on our payment terms with our coal suppliers.
What is net debt as on the year end?
28,400. And there is one more thing. There has been an increase in the stock of steel this year as compared to last year by around about 4.5 lakh tons. So that has also had an impact on the working capital.
Understood. So one last question on the iron ore sales. So what is the sales we did in FY23? And I mean, we are still carrying the inventory when we revalued in 2019 of around 8,000 crore, 4,000 in each current and non-current. So what is the comfort we are having in terms of realizing this value?
See, basically the majority of our iron ore is located in Jharkhand. So there are some issues about in case of Jharkhand for evacuation of ore from there. Some clearances are required from the Jharkhand government. So we are working on that, and we are optimistic that it will be cleared very soon. We've already deposited some royalty also in the GIMS portal also for evacuation of ore. So we feel that it will be we will be able to evacuate quite a lot of quantity this particular year. Like I think we are projected onward more than 2 million tons from Jharkhand group of mines in this particular financial year. And last year, I think the total sale of fines was around 4 lakh tons. So that is it. And yes, we are optimistic. And regarding this, we plan to liquidate these stocks in a rapid manner, because we have got you can say a three-pronged strategy in this. We'll be supplying to our own steel plants. We'll be using it for conversion to pellets. Try to sell it also, and we are also planning beneficiation and a pellet plant in Goa mines through an MDO route. So we feel that this evacuation will be quite fast once all the things fall in place.
Okay, so you said 4 lakh tons, right, for FY23?
4 lakh tons, yeah.
Okay, got it. All right, thank you so much, sir, and all the best.
Thank you. The next question is from the line of Rahul Jain from Systematics. Please go ahead.
Yeah, sir. Thanks for taking my question. So, firstly, there is a large amount of provisional sales. So, I think around 8,500 odd crores you mentioned in the India's results. So, when is this going to conclude, and what do you expect the direction of this? Is it going to go higher? And also, how much is receivable out of this?
Yeah, actually, this is mainly, we have these provisional sales for our rails, which we supply to the railways. So basically, what is happening is the pricing is done after the after the financial year ends. But the issue which has come up is that till now, we have not been able to get the price for 21-22 also. So the price at which we are billing to the railways is around 67,500 rupees per ton. So we expect a substantial amount from the railways once the CA cost finalizes this pricing of the railways for 21-22. And 22-23 also, we will try to get it this year. Otherwise, because there is normally a lag of around 1 year. So 21-22 we expect in say by the beginning or say by the second quarter of 23-24, and we'll try to get the 22-23 pricing also, which is again still at 67,500 in maybe end of 23-24 or maybe 24-25 beginning.
So you have booked 30,000 crores cumulatively, right? So on that number, we should see a big jump, right? Is that the right way to look at it?
Yeah, and that will like probably add straight to my bottom line also.
Right. Any number you want to give? What percentage in a range?
Like we have submitted a cost, but then I think we should not disclose it at the moment because it is subject to CA cost checking it and finalizing it.
Right. And so secondly, yeah. Hello? Yeah. Secondly, sir, we have now completed this large round of capex, which took us almost a decade. Any further plans to look at, say, go to 30 million or beyond, or what is the big picture over here?
Yeah, we have got plans lined up. We will be going in for ramping up of some of our facilities, and that will add around about 3 million tons in the next, you can say, 3 to 4 years. And besides this, we are planning expansion plans in ISCO Burnpur of around about 4.5 million tons, and another, you can say, 3 million tons in Bokaro, and even to some extent, we may also up to 31-32, we can have a plan in Rourkela Steel Plant. So our plans are to achieve around, you can say, 35 million tons by, you can say, 31-32. So already we have obtained the in-principle approval of the board to with the preparation of DPRs for Bokaro and ISCO Burnpur. And shortly we'll be also going in for Durgapur in some time now. Durgapur also we are planning an expansion.
Right. And so in the next 2 to 3 years, any meaningful number, like for example, for this year you have said 15% volume growth. Say in the next 3 years, any number which we have worked based on the plans we have?
Yeah, actually, what I was telling you that there are some debottlenecking facilities and some new facilities which we'll be bringing up, which will help us to increase our production by around about 2.5 to 3 million tons in the next 3 to 4 years. And after that, the benefits of the expansion will also start coming in.
Okay, sir. Thank you so much. Very helpful.
Thank you. The next question is from the line of Siddharth Mehrotra from Kotak Institutional Equities. Please go ahead.
Hi, sir. Is my voice audible?
Hi.
Can you hear me, sir?
Yeah.
Sir, a small clarification. Sir, our tax rate in this year has been around 15% odd, and this is the cash tax rate. So do we have any leftover credits, and what will be the tax rate in the future years, sir? Any guidance on that?
At 25%.
So we've exhausted all our previous year tax credits, sir?
Yes, we have exhausted.
Understood, sir. And secondly, just a small clarification. So we are spending around 4,000 crores annually when it comes to our capex, but when it comes to capacity additions, there hasn't been any really meaningful capacity additions. So am I to assume that this 4,000 crore odd number is mainly for the maintenance capex level? Is that understanding correct, sir?
Yes. You are correct to a very large extent. see, we have got these old coke oven batteries, so it's every 15 to 20 years, we have to keep, changing these batteries. Means, again, replace the battery, maybe on the same foundation, but we have to replace it. So it is basically these, and then some improvement in the productivity, for bringing up the improvement in productivities and all those things. We have these BF stoves, and we also have some facilities within the SMS and all, which actually will help us improve the operations, but will not add to the capacities. So they are basically debottlenecking and improvement, efficiency improvement facilities which we are having installed in our plants at the moment.
Sir, if that is the case, when do we start incurring growth capex, sir? Because you've highlighted repeatedly that we plan to expand our capacities. My question is on the timeline, sir. What sort of timelines do we expect for the growth capex part to come in?
Growth capex, as I was telling you, that we are in the stage of preparing the DPR for our ISCO Burnpur, and also for Bokaro it has also started. So these DPRs, once they are finalized, it will take some time for the DPR and the tender specifications to be finalized, which will be around 6 months, you can say from now onwards, 5 to 6 months. By August or September, we will be getting our stage 1 clearances for these projects, these expansion projects. Then we go out for a tendering activity, and maybe another 4 to 5 months down the line, we'll be able to finalize the tenders and come back for order placement. So we can expect by the end of this financial year, we'll be ready for order placement.
Understood, sir. And one, sir, last small question. What sort of steel price change are we seeing quarter on quarter for us, sir? Q3 versus Q4 in the realization side?
Q3 versus Q4, in case of long products, there was an increase of around about 2,000 rupees. And in case of flat products, there was an increase of around about 2,700 rupees.
And sir, the guidance for the upcoming quarter?
Upcoming has not been too good. Like there has been April was quite steady. May is slightly down as compared to April, say by around 2,000 to 2,500 rupees.
Okay, so basically we are back at 3Q levels.
Pardon?
Basically, it means we are roughly back at 3Q levels. All the gains of the past quarter have sort of disappeared.
Yes, it will be at that level, or maybe slightly marginally more than that.
Understood, sir. Understood, sir. Thanks a lot for your time, sir, and best of luck for the coming quarters.
Thank you very much.
Thank you. The next question is from the line of Aditya Welekar from Axis Securities. Please go ahead.
Thank you, sir. So, sir, you just touched based on the next leg of expansion. So, for FY25, what will be our capex guidance? So, I just wanted to understand from which year there will be a material increase in capex going forward.
Material increase in capex will probably be from, you can say, from FY25 second half. Because we will be trying to place the orders by the end of FY24, and then initially, there are basically the upfront payments which are onwards, you can say 3 to 5% of the total project cost for design and engineering and all. But the real thing will start probably from the second half of FY25.
So, what will be that full year FY25 capex?
See, we are not, because since the DPR is not yet ready, so we are not yet sure what will be the total outlay. We have projected a total outlay of nearly 1 lakh crore for our entire expansions and these debottlenecking facilities over the next, you can say, 9 to 10 years. So, and it will be peaking basically in the year 27, 28, 26, 27, 28 and 28, 29, when all the modernizations will be there, means going on together. So initially in 24-25 you don't expect much in that because it will be only one particular plant which will for which the expansion will be commencing. 25-26 the next plant expansion will commence, So basically, the real expenditure will start coming from 27, 28 and 20, 29.
So second question is on these other expenses. We can see in this quarter there was a jump of 9% sequentially and 6% on a year-on-year basis. Any one-off in that, or it's largely because of the increased production?
You are talking about the financial year?
No, I'm talking for Q4, other expenses.
Q4. Can you just give me some time for that? I'll just revert back to you.
Thanks, that's it from my side.
Yeah. Or we'll send it to you separately.
Thank you. The next question is from the line of Mohit Bhansali from Bonanza Portfolio Limited. Please go ahead.
Yeah, thanks for giving me a chance once more again, sir. What is the inventory level closing here?
The inventory level is 1.05 million ton.
1.05 million ton. And since you are saying that coking coal is very important and major factor, so you are again going for the big large expansion. So are you going to, in the DPR, are you going to make sure that you have the raw material security, or that is what you are at present doing, that sourcing coal from other sources, the same will go on?
See, basically, at the moment, we are sourcing, you can say around about 84 to 85% of our coal from, say, from our resources at Mozambique, Australia, and USA. We are importing from there. We are importing from our own, we have our own ICVL, which supplies us around about 1 million ton of coal. And besides that, indigenous coal is around 15%, which is mainly supplied from BCCL and some of our own operations. But shortly we will be now operating our Tasra mine. So this Tasra mine will be able to give us around about 1.6 to 1.7 million tons of coal annually, number one. And the ICVL has got a lot of reserves and it has got a lot of potential. So the some more additional capacities beyond this 1 million ton also, we will be sourcing from our own resources in Mozambique. So balance we will be requiring some more additional coal from Australia and US and Canada. So we will be going in for long-term agreements for that. And we are also trying to get our coal from Russia also now. We have started that also.
Okay. Basically, the question was like, you always have this volatility, and how you are going to escape from this volatility, because already you are going to spend a lot of money on the expansion, and after that expansion, if same problems occur, then you will be like in trouble again. That was what.
Then we have actually worked out a strategy where the expansion is phased out. Like initially, we are planning expansion in ISCO Burnpur. And the next expansion which we are planning is in Bokaro, which will come, you can say, on board a year later, a year down the line. And then Durgapur, which will again be a year further down the line. So that all the fund requirement is not bunched up at one place. So this is a strategy which we have worked out, and we hope we will be successful in this time.
Okay. And you said that your Tasra mine you are going to start. So when it is expected to start, sir?
Tasra mine, we have already finalized the tender, so we will be, let us see, as soon as possible.
So all the permissions are in place to mine?
Yeah, clearances are there. All clearances are there.
All clearances are there. And second thing is that I was going through some news that in Parliament, Steel Ministry has put up that expansions which you are doing around of 2,500 crores are delayed, and because of contractors issue. So are these issues are resolved or still going on?
See, we are resolving issues one by one. Like we had some issues in Rourkela which we resolved last year. and maybe in this particular year also, we will try to resolve as many issues as possible. But there's just one thing that I do not know in the parliament, whatever it is there, but we are trying, our objective now is to close all the old contracts so that, bring the confidence of the people who are our partners in projects. So our objective is basically that. So we have closed quite a lot of projects in the last, you can say, 1.5 years. So our plan is that close the projects as soon as possible. So whatever is there, we are even sometimes going in for out-of-court settlement also with the parties.
Mr. Mohit, we request that you return to the question queue for follow-up questions. We shall take the next question. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. I had a specific question on the Rourkela and Bokaro profitability. When I compare the Q4 profitability with the average quarterly profitability that we have seen over FY22, Rourkela and Bokaro still operates at 20 to 30% level. So are there any specific factors which is holding back profit at these two mills?
Actually, there is a thing that what has happened in 21-22. We fetched a very good price for our flat product. Basically, if you see the difference between flat and long products in 21-22 was in the range of 11 to 12,000 rupees. Now this has come down, and especially if you see in the last, you can say 3 quarters, Q2, Q3, Q4, there's hardly a difference between the long and the flat products in the market. So the major reason for very good profits last year was the good NSR which we got for the flat products. I think all the entire steel industry, whoever is in the flat product range, made substantial profits because of that.
So largely, as I understand, it's attributable to the external pricing factor, and there are no material plant-related issues here.
No plant-related issue or anything. It is basically the external factor, which has played a very big role last year.
Understood, sir. So another question was about understanding the specific improvements that has been done this year. Particularly, we see that the semis volume has gone down from 19% in FY22 to 13% in FY23. VAP products have also increased from 49% to 52.7%. So what are the specific improvements that has come through this year which is helping in this?
See, basically what is happening is our mills are performing quite well, especially the long product mills. We had set up a medium structural mill in Durgapur and a universal structural mill in ISP. So these have started performing really very well. Earlier the thing was that they were producing something like you can say 4 lakh or say 3.5 lakh tons per annum. Now we are seeing that the production from these mills has gone up to even you can say 6 lakh tons per annum or average of 50,000 tons per month. And USM, Universal Structural Mill, is also doing very well. So this is the major factor because of which we are having less of semis for sale now and more of our own finished products.
Would you be able to also share the current utilization level at both these mills?
I'll just convey it to you later on. Is it okay?
Sure, sir. And one more question. I just want to know, I'm not sure whether this has been shared earlier. What was the iron ore sale during the year?
4 lakh tons. 4 lakh tons.
4 lakh tons. Right, sir. Thanks. I'll return to the queue.
Okay, I just wanted to know, somebody wanted to know why was there an increase in expenditure during Q4 as compared to Q3. So the major reason is royalty, which had gone up by around 270 crores. Then conversion charges of 23 crores. and expenditure on CSR of around about 91 crore. These are the major three reasons for which the expenditure in Q4 was higher than Q3.
Thank you. The next question is from the line of Sumangal Nivatia from Kotak Securities. Please go ahead.
Question, please.
Yeah, thank you, sir, for the follow-up. Just two things. One is overall in terms of capacity from say currently 20 odd, what for next 3 years, where are we going, and what is the overall capex intensity of this expansion?
See, the total capex which we have planned up to 31-32 is in excess of 1 lakh crore. Okay, and with it peaking in the years from 27, 28, and 28, 29. This is the main thing, and otherwise the normal capex which we'll be having, say our debottlenecking and our normal AMR schemes and coke oven rebuilding and all, that will be, you can say, around 5,000 crores to 5,500 crores every year. This is going to be our normal expenditure, and besides this, the expansion will come.
Okay, so 5,000 normal expenditure which includes maintenance, and then maybe around 1 lakh crore over next 7-8 years.
Yeah.
And sir, what sort of leverage level are we comfortable? Because today also, I mean FY23, we have almost 3.5 times net debt to EBITDA. So this sort of capex of around 1,40,50,000 crores over next 7-8 years.
Yeah, actually, the debt to EBITDA is bad because of basically the EBITDA being low also. Actually, the denominator being low also is the cause of worry for us. It was very good last year, but this year again it's a cause of concern. We also understand that. See, last year it was around about 0.59. Now it is in the range of 3. Hopefully, if our EBITDA improves, I think it will have a corresponding effect on the debt part also, because we'll be able to reduce our debts also to some extent because of that.
Yes, sir. But sir, beyond what level then we will reassess our expansion plans? I mean, to what level from say current 3.5 we are comfortable increasing the leverage to?
We have got our plans where our cash flows are there. We have done some preliminary work. We are trying to restrict our debt equity ratio to 1:1. Means not go beyond that. So that is the sort of plans which we have got on hand.
Thank you. Due to time constraints, this was the last question. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you. The global economy, which was earlier reeling under the stress due to inflationary forces, tightening monetary policies, supply chain disruptions, has started to breathe easy as inflation is also coming under control. Even in case of steel production and apparent consumption, India is expected to outperform its peers quite handsomely, which augurs well for the industry in India. With a strong government spending on infrastructure, the share of investment in GDP has been rising consistently. The residential sector is also expected to grow, backed by affordable housing projects and urban demands. Private investment is improving on the back of production-linked incentive schemes. India's capital goods sector is also expected to benefit from the momentum in infrastructure and investment in renewable energy. Automotive and consumer durables are expected to maintain healthy growth driven by sustained growth in the private consumption. We hope that SAIL will also be able to deliver performance consistent with the projections for the domestic industry. Thank you.
Thank you. On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.